Everybody is talking about the Ethereum treasury companies and how the purchases through those newly formed companies is pushing up the Ethereum price. The question is, how much of the upwards price action in Ethereum is actually due to the purchases by those treasury companies, and how much of this is just hype, it's just attention, it's just additional purchases through short-term speculative money by potentially retail. Let's have a look at the data. Let's have a look at how the demand and supply dynamics are changing, and let's try to figure out where Ethereum is going from here and whether or not Ethereum is still a good bet even after that recent rally. Now clearly there have been two waves regarding the attention on the Ethereum treasury companies. Because just have a look at how the market cap of those companies in aggregate developed. There was a first rally when Sharplink started buying Ethereum. That then contracted very quickly, but then came the resurgence, and that's when other companies followed suit. Tommy Lee's BitMine now owns most of Ethereum. So Sharplink was the first mover, but it's not number one anymore. Here's the number of ETH held by different Ethereum treasury companies. And we can see there is quite a bit of concentration. Once we cover the first four, we have a good feeling of what's going on with that side of the market. So there's Sharplink with the ambassador Joe Lubin, who also founded Ethereum. With his early involvement in the crypto space, he's now estimated to be a multi-billionaire. And here is Tom Lee, head of Fundstrat Research, who talked a lot about Bitcoin in the early days and who's spearheading BitMine. And so here's the development of the Ethereum holdings over time. Sharplink did the initial purchases, then BitMine caught up, and with the recent purchases on the 11th of August, so 3 days ago, BitMine is now number one. Now the big question is what's going to happen here. Now there's the real possibility that there could be a competition between number one and number two, because in general in most markets the winner takes most. So whatever company is able to acquire more Ethereum in a shorter period of time tends to be able to also demand the highest premium over the net asset holdings. And so if BitMine and Sharplink are going to buy Ethereum faster and faster and lever up their positions, then this could have an accelerating effect also, of course, on the Ethereum price. And so here are the cumulative ETH holdings in US dollars over time. We are close to 6 billion. Here's the cumulative Ethereum holdings measured in ETH. We are close to 1.2 million. Now, how much is 1.2 million Ethereum? In the last month, the Ethereum supply grew by 73,000 ETH. So this is more than 1 year worth of supply acquired over the span of just 2 months. So all of this data is very bullish. The question is the price reaction of Ethereum in relation to that bullishness? How much appreciation should we actually expect with the current acquisition of the supply? So Ethereum's market cap is currently at 572 billion. 5.5 billion is held by the treasury companies, so roughly 1% of the supply. The Ethereum price in the last 2 months appreciated by 82% though. Now, when 1% of the supply gets bought up, an 82% price increase is definitely not justified, just based on those purchases. So there is some kind of anticipation here that more and more Ethereum is going to get purchased. So clearly, the market as a whole is currently speculating on future demand. They are buying now in anticipation of future demand. It's not the current demand, the current purchases of the treasury companies that's mainly responsible for the price appreciation. One might make the argument that crypto as a whole went up also during that time frame. But really, that argument only partially holds, because the Ethereum dominance also went up by 44% during that time frame. So the Ethereum dominance measures how much of all of crypto is currently in ETH. We're simply comparing the market caps, right? We compare all the market caps across all of crypto and see how big is Ethereum within all of crypto. And does it make sense when 1% of Ethereum supply gets purchased that Ethereum's relevance within crypto suddenly increases by 44%? I'm not so sure. There's clearly a positive impact of treasury purchases, and the anticipation is that something similar to what has happened for Bitcoin will happen for Ethereum as well. Here is the cumulative holdings of Bitcoin treasury companies. And here we can clearly see the concentration process, as in the winner takes most. MicroStrategy is owning pretty much all of the supply. But there's also a reflexive self-reinforcing effect. So again, this is the Bitcoin treasury company balances, but have a look at how the inflows from the ETFs have changed. As Bitcoin treasury companies buy, there's also more purchases through the ETFs. And so again, the idea here is the same. If you anticipate future purchases by new market participants, we might as well buy today in order to front run those purchases. This is what's happening with the ETFs. This is also what's happening now with Ethereum to a broader scale. Just have a look at this winner takes most effect. When we look at the Bitcoin ETFs, BlackRock is having a larger and larger market share. It's now holding a dominant position with 56% of the entire Bitcoin ETF market. And the exact same can be seen for the Ethereum ETF market. Here BlackRock owns 53%. And of course, the same will also happen for the treasury companies. And so that's what potentially accelerates the adoption. There's going to be one single winner in the space. Will it be Bitmine or will it be SharpLink? It seems like right now Bitmine is willing to take on more risk. But that then poses the question, if we think that the market for Bitcoin, Ethereum treasury companies will concentrate more and more, and that maybe Bitmine will be the winner out of all of this, does it make sense to buy Bitmine stock over just plain old Ethereum? Have a look at this long-term chart. This is now Bitmine relative to Ethereum, right? We are just looking at opportunity costs. Does it make sense to buy Bitmine or does it make sense to buy Ethereum? And of course, there was a lot of volatility with the purchases, a lot of excitement, then a correction, and now we are maybe in somewhat of an equilibrium. Now, this chart suggests that maybe it doesn't make sense to buy Bitmine over Ethereum, right? The price tends to go down. But all of that history is before the purchases of Ethereum. Have a look at MicroStrategy stock relative to Bitcoin before the purchases started. Of course, the stock tended to underperform Bitcoin. But then with this vertical line, this is when MicroStrategy started to purchase Bitcoin. And because of clever financial engineering and because of so much demand, MicroStrategy was able to outperform plain holding of Bitcoin. And that happened by quite a bit of a margin, 167%. Not many people anticipated that because most people thought that once the Bitcoin ETF launches, there's no real need for a MicroStrategy purchase to get indirect exposure. But history has definitely proven many doubters wrong. And so potentially we could see the exact same thing happening for Bitmine or for SharpLink, depending on who's going to get most market share. Now, Ethereum has already rallied quite a bit on the back of those Ethereum treasury companies, and it has rallied much more than the direct purchases of those companies, at least today, justifies. And so the real question is, where is the opportunity now? Why did we even see the formation of those Ethereum treasury companies? I believe Tom Lee decided to go with Ethereum and not with Bitcoin as an acquisition strategy because Bitcoin is already completely taken by MicroStrategy. It's hard to compete with MicroStrategy and still get a positive premium over net asset value. And so the logical conclusion from this is that people will see Tom Lee taking up all of the Ethereum market share for treasury companies and then try to find the next best thing. What's going to be the next best thing? Probably Solana. Have a look at Solana relative to Bitcoin. It underperformed over the years because Solana doesn't yet have an ETF in the US. BlackRock is not involved. And traditional finance is only buying Bitcoin or Ethereum, and the same is true for the treasury companies. Have a look at Solana relative to Ethereum. Of course, it now recently underperformed as there's all those inflows into the Ethereum ETF. But maybe we will see the formation of Solana treasury companies not so far out in the future. And then the question is just, where are we going to see that bounce? I think at some point Ethereum's risk to reward isn't really that attractive anymore, and Solana might be where the real upside is. The question, of course, is always, how can this be properly timed? Your guess is as good as mine. What I'm personally doing is I'm simply dollar cost averaging into Solana right now. I do this via relative valuation trades. So I buy Solana and I short some smaller altcoins that don't perform that well. But over time, I get myself exposed to more and more Solana over time, and I reduce my exposure to Ethereum. Again, because Ethereum has already run a lot. And this is a market of capital rotation. Wherever currently the retention is, this is where the market moves capital. and attention is fluctuating, right? It moves from asset to asset. Now, I strongly believe that most people look at crypto the wrong way. Most people just follow their altcoins on websites like CoinMarketCap. They look at the US dollar chart. They look at something like Optimism, see it's going up, they're happy. Or they look at something like Aave, it's going sideways, it's not good, it's not bad. But really, the answer whether or not an altcoin is a good investment is always in relation to something else. And once we look at the long-term price charts, we suddenly discover something that most people aren't aware of. Most people don't care about the following phenomenon enough, and that is token inflation. Most altcoins have a very quickly expanding token supply, and this website over here, Tokenomics.ai, lists the token inflation of various altcoins. Have a look at this, for example, ApeCoin. It started with 284 million ape, and now, after just 3 years, it's at 908 million ape. And have a look at how the price developed relative to the overall altcoin market cap. It was a complete disaster. And again, we're just looking at how does one altcoin do relative to the rest. Or check this out. This is Fetch AI. It started with 86 million FET token and now it's above 2 billion. And again, here is the relative chart of Fetch AI relative to the overall altcoin market cap. So we're just looking at relative performance. Is the altcoin a good investment? And more often than not, when the token inflation is high, the answer is no. Let's have a look at a few more examples. This is DYDX, a decentralized finance protocol for perpetual futures that started with 10 million tokens and is now at 711 million tokens. So a 70x in supply. Surprise, surprise, the price is going down relative to other altcoins. Here's 1inch, another decentralized finance protocol, again with a growing supply, again the same chart. And I could go on and on. Here's Optimism, a very large layer 2 scaling solution on top of Ethereum, also declining constantly after its initial wave of adoption. The people that really make money in crypto are the venture capitalists and the insiders and the teams that develop the projects, that get the tokens, dump them on the market, dump them on the retail investor. The retail investor is left holding the bag, and that's why the altcoins tend to underperform the major cryptocurrencies most of the time. Bitcoin, Ethereum and Solana don't have too much token inflation. They don't have that much new supply hitting the market all the time. That's why they can keep their value to a degree, at least relative to most altcoins, especially the inflationary altcoins. And this is a very broad effect. Have a look at this, right? Bitcoin roughly doubled in the last year. But how many of the medium-sized altcoins doubled in the last year? Let's have a look at the altcoins at rank 300 to 400. So altcoins that are relatively small still, that might have upside potential. How many did more than 100%? The answer is 1, 2, 3, 4, 5, 6, 7, 8. So there's 8 altcoins that did better, and there is 92 altcoins that did worse than Bitcoin during the time. And the problem really is survivorship bias. There are a few altcoins that still perform well, but how likely is it that we're going to pick the needle in the haystack? Say the one token, the ACT token, that did 1,457%. When you're buying an altcoin, is it more likely that you're going to get this one, or is it more likely that you're going to pick a few of those red ones? The problem is especially bad once you've got a diversified altcoin portfolio, because then you're losing a lot of the gains even if you pick one right winner. My approach is to flip this exactly around. When most altcoins underperform, and especially the altcoins that are very inflationary, that tend to go down, I don't just stay away, I see this as market inefficiency, as in there's enough retail investors that still buy those tokens that keep the price comparatively high, and then we can bet on falling prices of those altcoins and make money as they go down. The problem again is still, of course, correlation, right? When all of crypto is going up, even the crappiest of the altcoins will go up to a degree as well. So we have to hedge ourselves against the macro. So we can basically flip charts like this. Have a look at Bitcoin relative to DYDX, or have a look at Bitcoin relative to 1inch, or have a look at Bitcoin relative to Optimism. The charts are all the same and we can get exactly that kind of return. This is what I'm personally doing already for the last 4 years. And this is the result I got. Had I just dollar cost average into Bitcoin, I would have gotten the return with this gray line. But because I also bet on falling prices of the very crappy inflationary altcoins at the same time, I got the return in black over here. I'm sharing all the trades that I make, and I also opened a copy trading vehicle. The demand had been so high that I had to close it, unfortunately, but I've already traded with that for a month. And that month went very well. Annualized, we're already at 74%, and we had a maximum drawdown of the capital of only 2.6%. So this is very nice constant gains. Very much in line with what those charts here imply. Because again, this is not just random luck, this is not just timing the market. This is betting on the structure of the market because of the high token inflation everywhere that depresses prices. So I'm sharing all my trades, for example, over here on July 13th, how I've shorted WorldCoin. WorldCoin also has terrible tokenomics. And so the community simply copy trades, also comes up with own trading ideas, and there's real nice gains to be made. But what matters much more than the individual trade is of course the long term. I've done this for 4 years. I'm now doing this for the members automatically for 1 month. I'll continue to do this. I'll continue to share the performance here on this channel as well. I'm very confident in the strategy. I'm very confident that when you follow trades like this, that you will make money. And so here's everything you have to do. You just get into premium and you watch 2 videos. One of them being using perpetual futures on Hyperliquid. The other one being risk management with relative valuation bets. It's 1 hour in total of content. Afterwards, you know exactly how to set up trades like this. Once you have watched those 2 videos and you've joined the community, I will send you a direct message with my favorite trade right now. If you do not make money with that favorite trade in the span of the month that you signed up for, then I will refund your membership fee 100%, no questions asked. You will have premium for free. You can watch all the tutorials for free. I'm okay to take that risk because, again, some of those relative valuation trades, they simply go up very consistently without too much volatility. So here's the price for premium. It's currently $125 per month. Feel free to simply sign up, watch all the tutorials, learn everything, start trading yourself, start making your first profitable trade. If the first trade is not profitable, you get the money back. If you want to continue copy trading me, of course, then you have to sign up for a bit longer. But again, I do believe very much so, if you've got a crypto portfolio that's not just a few $100s, but a few $1,000s, you will make that money back very quickly. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. A link to premium pops up directly over here. Just click on that. It will lead you to the website. See you next time on YouTube, or see you in premium. Cheers.